Hi there! In this video I will show you if trading the Nadaraya Smooth Bollinger Bands reversal strategy with VWAP confirmation is a good strategy for cryptocurrency trading. I'll show you the strategy's performance in TradingView and also will test this on 50 crypto pairs on multiple time frames and with a multi-year dataset for the most rigid backtest you will find on the internet. So let's start after the intro. The strategy is inspired by the video you see on the screen now. I will also put a link in the description below. This trading strategy uses the Nadaraya Smooth Bollinger Bands with its default settings, and as a second indicator we will use the VWAP divergence indicator. The trading rules of this strategy are as follows. You can trade both long and short on multiple time frames. Enter long when the price closes below the lower band in either the level 1 or 2 zone, and then the price should close above the band again for the first confirmation. For the second and final confirmation, the VWAP line should turn green within 5 candles after the first confirmation. If this is the case, then enter the trade. There are 2 possible exit signals. Either exit the signal if the risk to reward level of 1 to 2 is reached, or when the price closes above the upper band. Short signals are the opposite of the long signals. The price should first close above the upper band, and then it should get below it again, and the price should continue downward. The final confirmation is when the VWAP turns red. Again, exit the trade if the risk to reward level of 1 to 2 is reached, or when the price closes below the lower band. To test this strategy, I created a TradingView strategy file that contained the smooth Bollinger Bands and the VWAP indicator. I also added some additional functionalities to make this strategy more flexible, like the amount of historic candles that you can use for the swing high or low, or the specific bands that the price should cross before generating a buy or sell signal, and also the choice of the VWAP confirmation or not. With these additional parameters, you can tweak the settings to be more flexible with this trading strategy's rule. You can detect more favorable trades or be more rigid with your trading rules to filter out bad signals. It's all up to you. In my case, the trading strategy had mixed results per coin and per time frame. So you will have to play around with the pairs and time frames you want to use for the strategy, or until you are satisfied with the results. At first glance, this strategy looks to be more fit for sideways markets, and it's best to be more careful to use this in the trending market to prevent false signals, since the price can go up the upper bands, make a dip below it to enter the trade, but then climb higher again, eventually taking your stop out. And the same can also happen when prices keep dipping in bear markets. I also did a backtest on multiple years of data on 50 crypto trading pairs and multiple time frames to provide you with the most trustworthy investigation. If you want to download these backtest results and also the Pine script, then visit my Patreon site because all is published there for the people who want to sponsor me. And for those who are just starting out with automated algo trading, I also wrote an extensive book about this subject you can get on Patreon and Amazon as well. But what about the backtest results? Well, let's say that unsupervised trading this algo with a bot can be tricky. As I earlier said, in ranging markets this can be a profitable trading strategy, but only if you constantly monitor the performance of the bot and the current market situation. Overall, the 30-minute time frame proves to be the best time frame to initially check if this strategy is working for your pairs. However, in my test, after initial positive results in equity, the curve took a nosedive and ended up making this algorithm perform not so well. It showed that there were too many unnecessary signals where stop losses could hit, and these rogue trades can eventually blow up your trading account. So overall, this is a strategy where you have to do some real good research to find the most profitable pairs, optimal parameters and ideal market circumstances, like in sideways markets. Initially it promised to be a good trading strategy as a baseline, as you can see in TradingView, but with automated trading you better look for another strategy. Maybe with the help of an additional confirmation indicator like RSI or additional trading rules, you can add more confidence to the trading signals. And parameter optimization can also improve performance, but here you have to be aware of introducing some bias, so don't get overboard. Now before I end this video, I want to be sure that you know that you should be aware that the things you just saw are based on past results and future performance is not guaranteed. So it might well be that in the future the strategy will gain its edge again. So you have to do some homework and research and do some rigorous tests before putting your actual money on the line. And knowing this, let's put an end to this video. If you like what I do, then please hit the like button and subscribe for future trading strategies. Thanks for watching and I will see you in the next one. Goodbye!